Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. The rules of the Online Gaming Act, which bans real money games, is yet to be notified. Government asked banks and fintech companies to facilitate refund of deposits to users. Companies had flagged challenges in issuing refunds due to banking restrictions.
Growth stage investor Elevate Venture Partners has marked the final close of its maiden fund at 1,400 crore rupees, about 20% lower than its initial $200 million target. The growth stage investor has already deployed one-third of the corpus through investments of $8 to $14 million each across 5 startups.
Tessolve, an independent semiconductor engineering services company, has secured $150 million in funding from TPG. Tessolve will use the additional capitals to strengthen global delivery centers, expand advanced test labs, and accelerate strategic acquisition.
OpenAI is scouting local partners to set up a data center in India with at least 1 gigawatt capacity. Bloomberg News reports OpenAI has formally registered as a legal entity in India and has begun building a local team. The company plans to open its first India office in Delhi later this year.
Google is set to face a modest EU antitrust fine in the coming weeks for allegedly anti-competitive practices in its ad tech business, Reuters reported. The fine will likely not be on the scale of a record €4.3 billion penalty imposed on Google by the EU competition enforcer in 2018 for using its Android mobile operating system to quash rivals.
On what's brewing today as India's electric two-wheeler market accelerates, Ather Energy is gearing up for its next growth phase. The Bengaluru-based startup has now climbed to the number 2 spot in India's EV scooter market. Its CEO and co-founder Tarun Mehta tells CNBC-TV18's Ritu Singh that a 20% market share is now on the horizon and lays out expansion plans to get to 700 stores by the end of the fiscal. Also details a newly launched EL platform in this exclusive chat. Take a look.
Motorcycles are there in the radar?
Yeah,
preempting that.
Yeah.
Motorcycles are there in the radar. We do think this is now the time to go deep and invest in the R&D for that platform. Like how we've invested in the EL platform R&D, the new scooter platform R&D over the last 2 years.
Yeah.
We think now is the time to invest in very deep motorcycle R&D. But I would say an actual product launch is at least 1, maybe still 2 years away.
Okay, 1 or 2 years away. But you know, as Ather, you've projected yourself as this premium market player, so to speak, in the EV space. With Rista, you know, some would call it a more mass market product.
Sure.
Now with the launch of your EL platform, which you say will be more cost effective for the company, should we expect a bit more push, strategic shift towards a more mass market segment?
It's possible, certainly. We announced a lot of things on EL today that lower the cost of the platform considerably. They lower the material cost, they lower the assembly cost, they lower the servicing cost. So overall, and we are also going to produce this out of a much larger integrated facility in Chhatrapati Sambhajinagar, Aurangabad.
Yeah.
So all of that does help and create a situation where we can price our products more aggressively. Obviously, we're not announcing price today, and obviously we're not giving you a specific thing, but I will acknowledge that. Yeah, I think EL does give us the ability to price products more aggressively.
Yeah.
Having said that, I'll also say I don't think the market is for products below $1 lakh.
Okay, so the new scooters, the range of scooters that do come out in the EL platform will not go below 1 lakh rupees.
Lakshman Rekha.
Okay, Lakshman Rekha, got that. You know, the other big news recently that's, you know, from the Vahan data that we see, you've climbed up to the number 2 spot just, you know, after TVS and ahead of Ola, Bajaj and Hero and the others. How confident are you of maintaining that kind of a lead, staying at that position, if not improving it further, especially given how some of your rivals do often resort to heavy discounting, something you haven't done much of, you know, to boost sales and have other advantages as well?
So we have the opinion that margin is not our lever. We don't play on margin. We don't hence play on discounts.
Yeah.
What we win and lose on are our products and the experiences we build for the consumers.
Yeah.
We didn't discount 450 to win market share. We built Rista, a product that is fundamentally lower cost and can target a larger market.
Yeah.
We will build EL as a product that is even better cost structure. We'll not just take Rista and discount it by 10-20,000 rupees to win market share.
Okay.
So that's how we've
Yeah.
And that's how we've always gone about it. So I don't think discounting is something you should expect us to do seriously.
Sure.
Right?
I mean, I get your point. You're not going to win the market on discounting and on pricing.
Yeah.
But talking about market share, coming back to that, you've gotten to number 2.
Yeah.
That's a place you think you can maintain with a wider lead?
I don't know. Somebody else could do something else. Honestly, it's not my business to predict what others would do. I think my business, it is my job to do to build great products, build them profitably, and keep scaling them.
20%?
Should not be a. I think it is in the horizon. I would say that.
Okay.
Because all these other markets, we've crossed 20% and more. 23, 24, 25, 27%.
And now that you're a publicly listed company, the next milestone investors are looking for is when you turn profitable.
Yeah.
Is that looking any clearer with the kind of cost efficiency also you bring in with your new platform?
On the unit economic side, I do believe EL will play a pretty substantial role in the next 2 years in expanding margins because of its fundamental cost structures. And you will notice with this concept here, that lower cost is not coming at the expense of a poorly built vehicle or an entry-level vehicle. In fact,
Sure.
I think by almost all accounts, most people have called it more premium than almost everything else that we've done today.
Okay.
So I do believe EL will play a substantial role in expanding gross margins further.
Okay.
And operating leverage is anyways continue to kick in because scale is going up.
Yeah.
We've already capacitized our R&D substantially. So we don't expect that to continue scaling up. So overall on the fixed cost side, we don't expect a substantial increase any longer.
Yeah.
But volumes are growing up really well.
Yeah, true. But what you don't have is the PLI certification.
Yes.
You didn't qualify for that. That's one big benefit you're missing out on.
I think, and that's one feedback I keep bringing up for policymakers. A company like Ather, which has invested one of the highest in the world on R&D in electric two-wheelers, which has one of the largest teams out there, which is running the largest infrastructure. Literally, the Indian standard is the Ather standard, and is the number 2 player today, and has put out the highest capex. To not qualify for PLI means, I think we should really revisit if the definitions were ever startup friendly.
But anyway, you don't want to cross the 1 lakh rupee Lakshman Rekha to begin with.
Yeah, because I don't have PLI.
Because you don't have PLI. So if you got PLI, we would see a lot cheaper.
No, I think I'll rather Lakshman Rekha at 1 lakh.
Okay, finally, since you say your Redux, which looks like a motorbike, but it's not a motorbike, it's a motor scooter. The launch of that is a few years away. The new scooter is 1 year away. Big things to look forward to in FY26. Whether that is margin improvement, any new launches, any.
You should expect to see, I think we've been doing a lot of work on gross margins. We've been doing a lot of work on quality. With Ather Stack, there's substantial work that's now happened in software. We've launched 2 new variants of Rista and 450 each, higher range variants. And ultimately, it's more stores. The story in FY26 for us is, simply put, expanding distribution. We are going to take this business from 200 stores to 400 stores and eventually 700 stores through the course of this year. And that's the biggest piece that anybody should plan for us.
And moving on, India's love for biryani is going global. House of Biryan, one of the country's fastest growing food tech platforms, has raised 32 crore rupees in a growth round backed by marquee investors, including cricket icon MS Dhoni. Founded by Michelin-starred chefs, HOB is on a mission to make biryani the next global food phenomenon alongside pizza and sushi, with plans to scale from 22 kitchens today to 150 outlets in the next 3 years. And with international expansion already underway in Dubai, House of Biryan is combining tech, culinary expertise and brand loyalty to create a truly global biryani powerhouse. Joining me now to discuss the brand's growth plans is Mohammad Bol, the co-founder of House of Biryan. Mohammad, thank you so much for taking time out and being here with us on Startup Street. First up, House of Biryan has just raised 32 crore rupees with marquee backers, including MS Dhoni, right? So what does this round mean for your growth ambitions?
So firstly, I would just like to say, it's been a very difficult time, especially for cloud kitchens and food brands in general. If you track the funding space and the interest that has been, it's been quite tepid the last 2 years. But I think, having said that, one thing that really worked for us was listening to our consumers. And if you actually see the philosophy that House of Biryan is on, is we want to make biryani cool again. So majority of our consumers are Gen Z, and they don't like to be told on how to eat their biryani. Our flagship, you can say, marquee category is Meri Wali Biryani, where a user can kind of assemble their own biryani, which nobody else in the market is doing. And I think that is something that differentiates us from the others. As a core philosophy, we do not want to keep indexing on the Indian heritage authenticity. I think that space has already been taken up. And if you really ask me personally, I feel on the Indian story side, I think we've kind of overhyped it. What we really need is, or what the world needs, what we believe is a global biryani platform, which serves you product that can be customized and slightly a little more universal to palates, irrespective of whether you're an Indian or not. So that's the mission we are on. And with
Sure.
that, we've just launched in Dubai a couple of weeks back.
So, coming to that, you're calling your firm the Chipotle of biryani, right? What does that vision sort of look like in practice, and how do you, plan to build a truly global brand? Like, you've started Dubai now, where else will we see you?
So firstly, when people talk about expansion, everybody talks about product market fit. If I were to give you the analogy, think of what happened to Mexican food pre and post Chipotle, right? Now, globally, Indian food is something people are aware of, but there is not an Indian brand which is probably giving you a universal product, which is similarly to what a Chipotle does with Mexican food, right? Recently, you have a brand called Kava, which has done this with Mediterranean food. And our philosophy is that, look, it's not about diluting the product, but it's about creating a product which has more universal appeal. Like, for example, the biryanis that we create. Fun fact, we've got 21 biryanis, but our 70% of the revenue is one biryani, which has actually no traditional spices of what normally you put in a biryani. So my point is that, look, the world wants to experience Indian food, but they want to do it in a way where it's not too intimidating, not an adventure. And they want to basically make it, you have to bring the cuisine to a point where it is probably okay for people to consume 2 and 3 or 4 times a week. And for that, you have to slightly tone things down and think of it like chicken rice, right? Chicken rice is super globally accepted. So why is biryani not had its, day in the sun with the same level of scale as these global QSRs are? And I think that's the mission HOB is on.
Absolutely. So 22 biryanis, and the most famous one is the one without too many of those spices. But, from 22 kitchens today to 150 outlets in the next 3 years, what's the sort of playbook that you have for scaling this fast while also staying profitable? If you could quickly tell us, because we're running out of time.
Sure. So firstly, I think we are going to be moving away from just a delivery-only format. We are testing out formats where, a user can go to an unmanned kiosk and probably swipe his credit card and select his biryani and, consume it within 5 minutes. The idea is to create these mini distribution biryani vents and do this the vision is to do this, find 30 of the most populous, densely populated global cities in the world and figure out a supply chain backbone and scale this to these cities with a product which has slightly more universal appeal and more Gen Z look and feel.
And, you're already EBITDA positive in your core markets, right? A rarity in especially food tech. So what's driving this capital efficient model, and how will you sort of sustain it as you expand globally? And also revenue-wise, where do you hope to end this year?
So revenue-wise, our aim is to at least go north of 120 crores this financial year. And the reason why we are so unit economic positive is purely because our repeats are very high. So our repeats are around 55%, 55 to 60%. We do not need to push a lot of discount. That is, I think, one of the main reasons why as a brand or as an org, we are super profitable, because we are not really chasing or boosting top line by giving discount or ads for that matter.
All right, Mohammed, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey of yours to make biryani a global phenomenon.
Yeah, we'll do our best. Thank you. Thank you for having us.
With that, moving to our What's Brewing segment. From a homegrown prototype in Bangalore to Time's Best Inventions Award, Cradlewise, a tech-driven hardware company, is redefining smart sleep solutions for infants. Now, with over 30 million hours of baby sleep data and a new factory in Pune, it is taking its Made in India, designed for the world vision global. Joining me now to talk about building a cross-border hardware startup and the India edge in deep tech manufacturing is Radhika Patil, co-founder and CEO of Cradlewise. Radhika, welcome back to Startup Street. You and Bharat built the first prototype in your Bengaluru home in 2018. Today, Cradlewise is a globally recognized brand endorsed by Time and Sam Altman. What did it take to go from a personal idea to a world-class product?
Yeah, thanks, Shruti, for having me again. It's a pleasure. Yes, I mean, the journey has been very tough, honestly, because you're building for the most nuanced category, the parents, right? So one of the things that has helped us being extremely customer obsessed, because there is no scope for having a beta product. Like you don't have the luxury of having a beta product. So launching to the early adopters, listening to them day in and day out, and just being customer obsessed has helped us build this global scale.
Right. Radhika, you recently set up your own factory in Pune, moving manufacturing from China and Vietnam back to India. Elaborate on what this shift means for your supply chain and scaling strategy.
Yes, we built a state-of-art facility in Pune to scale the manufacturing. It was not just the scaling, but scaling with quality. And also for an innovative product like us, we just need better control so that we have faster cycles on innovation. So definitely the advantage of our manufacturing talent and the push by the PM on Make in India has really helped us take this decision as a next business move for us. So just leveraging the manufacturing talent and the proximity to the ports has been strategic in choosing Pune as the location. And as I mentioned, right, it's the faster innovation cycles that helps us, and also our commitment to the quality as we build a baby tech, world-class baby tech product.
Okay, speaking of Prime Minister Modi, he often says, Make in India, design for the world, and you've lived that motto with Cradlewise. How do you balance, Radhika, building for Indian parents with designing a product that resonates with families across the US, Canada, and soon the UK and Australia as well?
Oh yes, oh yes. It is very difficult. It's like A.R. Rahman's song. It's loved across borders, right? And building for babies is such a, you have to take the cultural aspect into because it's such a lifestyle and a cultural thing, right? Raising your own child is having so many nuances, and customizing the product for global markets and Indian parents. I think so. What has really helped us is the founder product fit here, right? We as parents can address these concerns upfront, and also we launched in the global market, so we got to test across cultures. And what we have done here is that apart from our smart soothe technology that where basically put sleep on autopilot, we have given a lot of customization, because not only it's the cultural thing, even the baby kind of changes every week in its sleep patterns.
Sure.
So the cradle kind of grows with the baby.
Okay. You've often spoken about the role Cradlewise can play in supporting working parents. Do you see Indian companies incorporating Cradlewise into their employee benefit programs, just as they do with, healthcare or childcare allowances? Could this be a new way India Inc. steps up for young families?
Oh, yes, absolutely, Shruti. I think so. India Inc. is leading the way, and the Indian government with the 26 weeks of maternity leave. I think so. It's one of the most pro policies, and I did not have it when I had my first kid. But yes, I'm very happy to see that the parents of today are getting this luxury of being with the baby. I think the most stressful period for parents is the transition, right? When you are starting back work, and then how is it going to work without me? And the good night's sleep is what the India Inc. can help fund and help support in terms of mental health, productivity, and even retention, right? I think so. It will make a huge difference in terms of your bottom line if you support parents and if they come just more confident and refreshed. Apart from that, I think what really plays a role is that it's just that you can have help during the day, but during the night time, you need those quiet hours, and Cradlewise could be a helping hand.
Absolutely. Very quickly, headquartered between San Francisco and Bengaluru, Radhika, you're running a cross-border startup. What is the biggest challenge and the biggest opportunity, and how do you stand apart from global incumbents in baby tech?
Right. So for us, cross-border has worked out amazing because of the talent and the manufacturing expertise that we have in India, and having access to the global market and testing, and being on our toes in terms of the certification standards, right? And having the global platform as our marketing leverage. So for us, it has worked out amazing with the talent from India and the manufacturing expertise that we get in, and having access to the global market. In terms of, we are living, obviously it is just like living across 2 time zones at the same time, but wouldn't have done any other way.
Okay, one final question before I let you go. Cradlewise has tracked over 30 million hours of baby sleep data. Radhika, how are you using this massive data set to sharpen your AI, and what's next in terms of product innovation?
Yeah, so this is one thing that, a lot of, the tech innovation lacks is baby sleep data. For adults, it's extremely easy. And now with all the wearable devices and your smart beds, it's very easy to have adult sleep data and to process that data. But for babies, it's very difficult, right? You don't want too many attachments and something touching the baby. So with the contactless monitoring that Cradlewise gets, we have the largest data set for baby sleep, and it helps us power some, I can just give you a cry classification. Why is my baby crying? Or even customizing your sleep pattern and giving, now the next thing that we are working on, can we coach the parents on what is the right sleep schedule? And where the AI is not just on your laptop and co-pilots while you're working, but AI is actually at your home helping you with sleep.
All right, Radhika, we're completely run out of time, but many thanks for joining us on Startup Street today, and wish you the very best with all your expansion plans.
Thank you so much, Shruti. Thanks for having us.
On that note, it is time for us to head into a short break. But coming up next, few Indian brands have managed to turn design into a global identity. Nicobar is one of them. Started in 2016, it has grown into 200 crore rupee profitable business with 25 stores across India. We check in with the firm's founder to find out more.
Welcome back to Startup Street. Few Indian brands have managed to turn design into a global identity. Nicobar is one of them. Started in 2016, it has grown into a 200 crore rupee profitable business with 25 stores across India without venture capital. Aishwarya Anand brings you the story of how this contemporary lifestyle brand is redefining modern Indian design. Take a look.
I'm sure many of you have seen one of these. Maybe you gifted it to a friend or spotted it in someone's kitchen. Simple, elegant, and somehow familiar. Well, that is the design language of Nicobar. But what most of us don't know is that everything that Nicobar makes begins here at a farm in Chhatarpur, where Nicobar's entire philosophy of slow, mindful living takes root long before it reaches the shelves of the stores. Rahul, can you take us back to the inception story of Nicobar in 2015? What was the gap that you were trying to solve, and why the idea of modern living?
Core idea was, why do we only manufacture for the rest of the world? Why can't we create brands that stand for something from India for the world? In just the way that IKEA represents, let's say, Sweden or Scandinavia,
Correct.
Muji represents Japan,
Correct.
where is India's signature for the world?
Rahul Rai and Simran Lal found inspiration during travels in Sri Lanka, where Geoffrey Bawa's tropical modernism posed a question. What could be India's own design language? That idea became Nicobar's North Star.
Simran made the statement that India has the longest coastline in the world, and yet there isn't a distinctive tropical signature from India.
Correct.
And so she said, everything we'll do will be inspired by journeys across the Indian Ocean.
After 18 months of research, the brand launched in 2016 with 3 categories: home, clothing, and travel.
Now walk us through the journey of a product, okay? From idea to store shelf, how much time and investment does that typically take?
It's almost a 8-9 month cycle. We start with deep research on coming up with the story. And so this could be a collection inspired by the plains of Bengal. That's put together by the creative directors, and then the product team start reinterpreting it. We probably end up investing, for every new drop that we do, potentially 3 to 8 crores. We use recyclable glass, jute, something in our brand that is just a little more in sync with the planet.
Here's where the script really flips. Nicobar has grown to over 20 stores across India, in Mumbai, Delhi, Bangalore, and even Lucknow. But they've done so without raising a single rupees in venture capital. No flashy ad campaigns, no celebrity endorsements, just organic growth.
Our retail stores turned profitable within the first couple of months. So Nicobar has just hit about 200 crores of revenue. Of that, 65% comes from our stores and 35% comes from online. 99% of that online revenue is on our own platform. Recently launched on Tata Click Luxury as our first third-party platform.
From Bengal weaves and Chanderi silks to Firozabad glass and Moradabad brass, Nicobar's supply chain is entirely artisan-driven. No factories, just design-led, craft-powered production. That philosophy defines its pricing too. On average, products sell for about 2,500 rupees with a basket size of 3,000 rupees and order values between 7,500 and 8,000 rupees.
Nicobar isn't just looking at today. They're investing in material innovation,